Hi friends, this is Dr. Meherji. Learn smart, score high always. It's a transaction exposure and a translation exposure. In case of multinational companies, we find these two types of exposures. In case of transaction exposure, it affects the real cash flows from specific transactions. While in case of translation exposure, it affects reported financial statement values without direct cash flow impact. When and where it will happen? From the moment a foreign currency transaction is agreed upon and until it is settled, transaction exposure will happen. In international transactions involving foreign currency cash flows, in case of a trade or a loan transaction like that. When it comes to translation exposure, at the end of each reporting period, when converting foreign accounts to the parent's currency, it will happen. And multinational companies with foreign subsidiaries during financial statement consolidation, one can find the translation exposure. It is the main difference between transaction exposure and translation exposure.